Hello everyone, welcome back to our channel Address Advisors. We are very happy and excited to see a tremendous amount of questions and feedback to our previous podcast. We got so much questions, so much feedback, so much queries. In fact, a lot of people called us also. We are very happy and super excited to interact with you all, and we will try our level best to give you the best answers as fast as possible. Now coming to the today's podcast, we will try and cover a very important aspect of the real estate. The key thing is how to go about buying a real estate. Which is the best market to buy, when to buy? That is the most important question. So we'll try and cover that in today's podcast. Today we are going to talk about a very important aspect of buying a real estate. Most of the buyers who are buying a real estate, especially residential, the one biggest question which comes to the mind is which market to invest, when to invest, what is the right market to enter, at what price it should enter, and at what time. There's so much information available. Sometimes information availability overhang also creates some confusion. We don't know which information to trust because information availability is sometimes very different, and it depends upon the source of the information. So you will have different views for the same market, same product, same builder. So it's very confusing, especially in today's market when there are so many social media options available for buyers to explore. So of course I understand, it's a valid concern they have because they are planning to put a large chunk of capital for buying a real estate. This is one of the biggest decision, probably this is one of the first biggest decision from capital perspective in anyone's life to invest. If you're looking to buy any home or apartment, let's say 1 crore or 1.5 crores or upwards of that, it's a very big decision. So I fully understand, and we keep getting those questions from the buyers who are looking to enter the real estate, probably planning to buy the first home or first investment in real estate. Their main concern is how to assess a market. Like in any city, they will be typically, if you take just broadly 4 zones, north, south, east, west, and there will be good amount of micro markets in each zone. So I just say roughly around, you can say 10 to 12 big micro markets in each city. A city like Bangalore may have little more, but generally you can say around 10 to 12 or 14 big micro markets are there. But then the question is where to invest and when to invest. So that is the question which we face from our customers on a regular basis, on a day-to-day basis. If you look at it, it's a very valid question, it's a very genuine question. And of course, they cannot be a generic one straight answer for everyone because of course everyone is different, every market is different, requirements are different. But still, based on our experience, we have seen there is a pattern of how to go about finding your right micro market and right property or right home. So what happens, like if you're looking at any city, I'll give example of Bangalore only. So Bangalore has so many micro markets. Let's say today if you look at on one side in east you have Whitefield, you have Sarjapur Road on southeast, you have Bilandur, which is again closer to Koromangala. These are the new peripheral areas where development has predominantly happened in last, let's say 15 years or 20 years. Then they established micro markets like Indranagar, Koromangala, Jayanagar, JP Nagar, old markets which are there for like almost 30-35 years, and they are doing extremely well. Of course they have their own intricacies, they have their own demand, they have their own preferences. So a lot of people you'll see they have to have a preference towards a particular micro market. They want to stay in that for various reasons. It can be maybe a societal reason, it can be religious reason, it can be economic reasons, like they want to be closer to their office or workplace, or they want to be closer to their education institute where the kids are going or they are working. But then of course it creates some pressure. So you will always see in every city the city market from real estate's perspective is never uniform. It's always like going high and low depending upon the stratas or clusters, what you call. So sometimes one market will do better than the other market. Sometimes like East Bangalore is doing much better. Initially Whitefield was doing very good when the outer ring road market didn't exist. So even Electronic City was doing well, but initially like only Electronic City in south and Whitefield was there in east. There was no market in Bilandur, hardly few projects were there. But what happens, new projects, new areas, new micro markets get evolved based on many factors. So what happens is every city eventually will try and achieve equilibrium. It's a very basic concept in science, where eventually everything will be tending to go towards equilibrium. So for example, we all have read in physics, there are high pressure zones, low pressure zones. So there's always a natural movement from high pressure zone to low pressure zones for everything. So what happens, like in some areas, let's say at some point of time, the pricing of real estate, the entry pricing of real estate has gone a bit higher than the affordability of the people who are living there. What to do? I mean, that's a big question. So that will become a high pressure zone. Maybe eventually with time, people will be forced to stay on rent rather than buying because the capital pricing is high. But then it will always push the rental also to go up. So the cycle is, first the capital price will be there, then there will be rental demand. Then because of more rental demand, the capital pricing will go up. The capital pricing will go up. Then of course rent will also try and follow that pattern. So rental and capital pricing go hand in hand. And in a particular micro market, over a period of time, because of, let's say, economic development, let's say because of IT parks or because of other offices or maybe because of any economic activity, the area will achieve a high pressure zone. So where probably not everyone is working in that micro market will be able to afford a real estate for purchase, even rental. Like, we have seen in Bangalore especially last 2 to 3 quarters, the rentals have increased by at least 30 to 35%. So it is creating some amount of pressure on a lot of stakeholders or tenants or residents. So what happens, they always look to go towards low pressure zone. So in a city like Bangalore, for example, there are always micro market who are relatively putting less pressure on pricing. So this is a very classic example which I give to my clients, which is a very recent example. So Whitefield, of course, is the hub of IT. You have best of the companies located in IT in Whitefield, and the capital pricing have increased from, let's say, 8,000 and 9,000 rupees 4-5 years back to now almost 13,000-14,000 rupees a square feet. The rental also have gone up. A 2-bedroom probably will cost around 50-55,000, which was like 30-35,000 maybe 4-5 years back. So the pricing has gone up. What happens, people will feel some pressure and they will try and look for low pressure zones from real estate perspective. So the blessing is disguised was the metro. Once the metro's operation started, the metro started connecting markets like Mysore Road to Whitefield. Mysore Road was, if you compare in last 4 to 5 years, the pricing of real estate in Mysore Road is not gone that high, which is there in, let's say, Whitefield or Bellandur or Sarjapur Road. So relatively, if you look at from pricing perspective, that was there's a delta. So the sale price in a Whitefield is, let's say, 13,000, 14,000 rupees square feet, versus in Mysore Road, it was probably a delta of 4 to 5,000 rupees square feet less. It's a good number, it's a good delta. 35-40% is a good delta to have. Similarly, rentals also, like rentals were in fact much lesser in Mysore Road. So what happens, because someone who is not very happy or excited to pay that kind of money in Whitefield, he'll be okay to trade off an extra 15-20 minutes travel time. Because see, within the Whitefield also, because of traffic and all that, people of course take some time to reach their destination. Not everyone is staying just next to their office. So from a travel time of say 20-25 minutes, if it is increases to 40-45 minutes in metro, a lot of people will be okay with that. So the movement has happened from high pressure zone to low pressure zone. It's a very organic and scientific thing. So my answer to people who are looking to invest is, the key is to look for low pressure zones or low pressure real estate markets in every city. You will always, if you look carefully, if you look around and see and just compare in every city, eventually it will be equilibrium. May not be a constant equilibrium, may not be for long, but of course, price will keep on fluctuating, but the tendency of pricing will be to go towards equilibrium. So I'm not saying perpetually Mysore Road pricing will be less than Whitefield. It may go equal to or more than Whitefield. Then again, the reverse thing may happen, or maybe some new micro market may happen. So my take for this perspective is, always look for equilibrium in a city. Do some research on all the micro markets. Nowadays, all the data is available online. Which all micro markets have what are the pricing. Again, I'm not saying you should just for the sake of pricing go like 30-40 kilometers away from town and take a house and stay there if there's no connectivity. You have to also do research in terms of how that micro market or area will figure out in terms of infrastructure and connectivity next 3 to 5 years. If you know there is plan by authorities to build roads or metro or any other form of transport or any other connectivity, or if you know the plans, which will probably may take some time, maybe instead of 3 it may take 5 years, but eventually it will happen. If it will happen and if you have that insight, definitely it's a good thing to bet on. So I will definitely advise, my advice to clients will be always look for low pressure areas from real estate perspective. You will always find, like I'll give you a quick example, let's say Electronic City, which is just next to Koromangala, HSR, BTM. HSR, BTM, Koromangala are good in terms of pricing. The pricing delta is higher than the Electronic City today. We know, metro corridor is almost ready. It will take maybe 1 or 2 quarters more. Once the metro will be functional, already because of that anticipation or expectation, the pricing in Electronic City has gone a little bit higher. There's a good traction. People are buying and investing, but still, till the metro get functional fully, there's always a delta. So this is immediate, but I'm sure you will be able to do some research, and we also advise that to look for areas where you see potential. That will be always a good bet, but this may not happen immediately. Probably you have to wait. If you have a horizon to wait for 3 to 5 years, that's a good time frame actually, because any project, if you're investing in a new project also, generally the developer says the completion will take 3 to 5 years. As per RERA, generally they put 5 years. Sometimes they complete earlier also, but then this is a good time frame. That much visibility probably you have and people will have, and again, it's not a very difficult thing to do research on this. So my advice will be, if you're looking to invest and you want to assess which micro market to go, what is the right pricing, what is the right time to enter, then you have to look for low pressure zones from real estate perspective. One doubt I want to clarify: many people ask, what is the right time for me to buy a real estate? Maybe that's a wrong question, because see, there is no timing for buying a real estate. It's like, someone is asking, what is the best time for me to study something, let's say do MBA after graduation. What is the best time for me to get married? What is the best time for me to family planning? It all depends upon your stage and your financial situation. So probably I have seen people investing in real estate in the worst real estate cycle, still making money. And I also seen people, maybe because of some wrong judgment calls which they took, have actually not make money even if the situation was favorable. So it all depends upon your situation, your standing. So I will say one should do research on the micro market in terms of how they are looking at for next 3 to 5 years, and then take a decision. But always take your own consideration in mind. There is no wrong or right timing from self perspective or individual perspective to invest in real estate. People do buy real estate in every cycle: good time, bad time, good price, low price. Like in stock market, for example, stock market fluctuate a lot, but then people do invest at every stage. Of course, some people will lose money, some people will make money. In fact, stock market may more people lose money than people make money. So, but then of course people make money in all cycles. So real estate also, it is not speculative, it is more demand driven, it is end user driven. It depends upon your ability and interest to buy. So it is all depend upon when you are ready to buy a real estate, you should buy. And when you're ready to buy real estate, you should see whether you want to enter at the right market. Now, how to assess the market? You have to see how the pricing is featuring in that micro market vis-a-vis the other micro markets. If you feel the pricing is gone up suddenly last 3 to 4 quarters, see, if you look at a delta of 3 to 4 quarters, and if you see the pricing is jumped by 35-40%, that market is moving a little bit towards high pressure zone. I'm not saying high price zone, it's not the right term. High pressure zone means maybe it may not be sustainable for a good segment of people to continue to stay there, maybe on purchase or rent. So those people will probably look for a little lower pressure zone from real estate perspective. So I think that is something which is very important for everyone to understand, assess and do it. And if you have any doubt, if you have any confusion, probably the best thing is put the data. Nothing, no one can deny data. See, data speaks truth. If whatever people say, whatever comes on news, whatever is there on social media, may not be fully based on data. So you take hard data. What is data saying? Whether the market has gone up. Today, most of the social media is full with a lot of assumptions. I'll not say you should go with the assumptions, go with data, because data cannot go wrong. You know the pricing going on. If you go to any society, any area, you ask questions, you know what is the expectation, you know what is the selling price, what is the rental. It's not difficult. This information is available in most of the good portals, listing portals. So of course you can qualify by putting some discount for negotiation, but look for hard data. Data never goes wrong. One may say, there is a bigger quantum of negotiations. Someone may say, I can negotiate up to 10%, 20%, 30%, 40%. Again, I have seen negotiation only happens depending upon the situation of the market. As I said, in a high pressure zone, probably the scope of negotiation will be probably little limited, but versus in a low pressure zone, of course they are good opportunities, the pricing is already attractive, still you may get some opportunity to negotiate. So it purely depends upon data. So our advice to client, what we always tell is, always listen to data, what it says, and take an informed decision. Hope you find this podcast very useful and informative. If you have any questions, any query, please feel free to put in a comment box in the video in YouTube. We'll be very happy to answer all your queries and questions. Wish you all a very happy and prosperous new year. May 2024 bring the best of real estate for you. All the best. Happy New Year again. Thanks a lot.